I made 6 figures trading this simple trading strategy, and in this video I will break down the entire strategy for absolutely free. All you need to do is to watch this video till the end, and by the end of this video you will know exactly how I made these numbers. Now I want you guys to know a little bit about my trading background. So I started trading back in 2015. I wasn't profitable until 2019. I discovered ICT in 2017, and gradually with experience and practice I started becoming profitable during the early 2019, and since 2019 I've been making consistent profits. Of course I had losing months and weeks, but overall I have been profitable since 2019. Now I have a lot of models on my YouTube channel and in my trading course, but this strategy that I'm about to reveal today, I have never uploaded it on YouTube or even my trading course. Yes, you heard that right. I have kept this strategy as a secret and I never revealed it before. So without wasting any more time, let's move on with the video. Alright, so here is the strategy. So first of all, you have to mark out the Asian session high and you have to mark out the Asian session low. To do that, I use an indicator by the name FXN, Asian Session Range by Rob Minty. It will mark out the Asian high and low for me. Now once you have marked out the Asian high and Asian low, you are waiting for price to break out of either the Asian high or the Asian low. Alright, so the price will break out after 2 a.m. New York time. So let's say if price breaks out of the Asian high, I want the body to close above the Asian high. Wicks don't matter, okay? Once the body closes, all you have to do from here onwards is you use your Fibonacci tool. Use your Fibonacci from Asian low to Asian high. So this is the low, this is the high. We use that and we get these numbers. So make sure you copy these numbers, 0.4 and 0.5. Now once price broke out of the Asian range, all I'm waiting for is a pullback to the 0.4 level or to 0.5 level. Now you have to get an entry before New York session. If you don't get an entry before New York session, the setup becomes invalid. Now let's say price comes into 0.4 level. You can take your entry, but personally I wait for 0.5 level as it gives me a better risk to reward ratio. But most of the time, beware that price will most of the time will come to the 0.4 level and then bounce off it. Okay, so keep that in mind. Now you take your entry from the 0.5 or 0.4 level, you put your stop loss below the previous low, or to be on the very safe side, you can put your stop below the Asian low. Now for take profit level, all you are doing is you are going for 1 to 2 or 1 to 3. Very simple, guys. And if you trade this strategy with daily bias, your win rate will significantly improve. All right, so this is how I would find my daily bias. So I can use the external and internal liquidity method. So basically you have, an external liquidity here, and just below that you would have a fair value gap, right? So I have a bunch of videos on this on my YouTube channel. If you haven't watched them, go watch them and then come back to this video. So on the daily time frame, what I want to see is basically a purge on the external liquidity, and we must have internal liquidity, right? Now on the 1 hour time frame, I'm looking for a market structure shift to confirm my bias. Once I have the market structure shift on the 1 hour time frame, what I'm looking for is a expansions to the downside. So whenever the Asian session, the high or low is broken, in this case, it would be the lows. So whenever it is broken, I will look for a pullback entry on the 5-minute time frame. So on the 1 hour time frame, we get the confirmation that, okay, our bias is confirmed. Now, on the 5-minute time frame, what you want to do is the first entry, you have to wait for price to go into some form of PDI, right? Could be a breaker block, could be a fair value gap. And from there onwards, you start to take your expansion moves. So whenever Asia low is broken, you take your entry. Pullback, right? Asian low broken, take your entry on the pullback. Asian low broken, take your entry to pullback, and repeat that until the internal liquidity is taken out. So I will repeat the strategy once again quickly, and then we will move on to the examples. So very simple, mark out the Asian high and Asian low. The Asian session starts from around 8 p.m. I guess, and 20, right? It might be 20 New York time, right? So you mark out the Asian low and you mark out the Asian high right at 2 a.m. Once the 2 a.m. hits, you mark out your Asian high and Asian low. Now you're either waiting for price to break out above the Asian high with the candle closure or below the Asian low with a candle closure. Once the candle closes, right, after 2 a.m., what you want to do is you simply have to use your Fibonacci tool. So let's say price broke below the Asian low, you will be using your Fibonacci from the high of Asia to the low of Asia. And if price broke above it, you will be using your Fibonacci from the Asian low to Asian high to get the 0.4 and 0.5 level. All you're doing is taking a pullback entry of the 50% of the Asian range. Now this level is very like, I don't know how to explain this, but whenever price comes into the 0.5 or 0.4 level of the Asian range, you will mostly get expansion. This is where price will expand towards its original direction. That is the main reason why this strategy works so well. Even if you're right 50% of the time, the risk to reward that you can get with this strategy is insane. Personally, I go for 1 to 2 or 1 to 3, but you can even hold even better, right? You can go till 1 to 5, 1 to 6. It all depends on you, all right? But I personally go with 1 to 2 or 1 to 3. If my bias is very strong, I will hold till 1 to 3. But if my bias is like weak, I will hold till 1 to 2. Now, to be realistic, please note that there will be days where you will lose with this strategy, but most of the time you will win. And this strategy has alone made me 6 figures. I am not even kidding. This strategy is so simple, so easy. So let me give you guys some examples and then I will end the video. All right, so here is example number 1. Now this strategy works the best with Euro USD, GBP USD, NAS 100 and S&P 500. All right, over here you can see the indicator has already marked out the Asian high, which is actually the opening candle, and the low. All right, so let's mark out the Asian high, which is here, and the Asian low, which is right here. Now as you can see, price broke out of the Asian high over here. The body closed right here. Now all you simply need to do from here onwards is use your Fibonacci tool from the low of Asia to the high of Asia, and price broke out. You can see, right, we got our entry during the London session, which is one of the rules. Entry probably here or here, and you can see the beautiful expansion to the upside. So if I went long on the 0.5 level, the recent low would be right here. As you can see, I would have put my stop here and it would have given me, you can see the numbers, but I would have of course held it till 1 to 2 or 1 to 3. And if you went with the stop loss below the Asian low, you could have gone for 1 to 2 or even 1 to 3. All right, so it's very simple, guys. It's like literally all you need. Trading is very simple. Most of the people overcomplicate it so much that they just get lost in this void where there's no return. All right, I want you guys to simplify trading as much as possible. So let me give you guys one more example. All right, guys, so here is example number 2. I'm looking at Euro USD, and remember, this strategy works on the 5-minute time frame. All right, it doesn't work on any other time frame, so keep that in mind. And it works the best with Euro USD, GBP USD, NAS 100, S&P 500. So over here I have marked out the Asian high and the Asian low. Now as you can see, price broke out of the Asian low after 2. That's what we want. We have to mark out the Asian low and Asian high after 2 a.m. New York time, and the body closes here. It sets the bias, I would say. You can call that. It's totally all right. Now all you have to do is use your Fibonacci from the high of Asia to the low of Asia. Now all you can see here is price came back to the 0.5 level of the Asian range, and it gave us a beautiful expansion to the downside. Now if you took your entry from the 0.5 level and you put your stop above this high, you would have actually, let's see, because this is going to be very interesting. Okay, you would be safe, but maybe with spreads you might have got stopped out. So the best approach, as I said before, could be to put your stop above the Asian high, and you could have gone for 1 to 2 or 1 to 3. As I said before, the price can go even expand to even 1 to 5 or 1 to 6. And a very beautiful example, guys. Let's move on to another example. All right, so here is another example, and it happened on 14th November. So it keeps on happening, guys. All right, I've kept this hidden, but here it is. So just enjoy, I guess. So over here, as you can see, I have the Asian low and the Asian high over here, and price broke out of the Asian high. So what does that mean? We have to take a long position of the 0.5 level or 0.4 level of the Asian range. So if I use my Fibonacci from the low to the high, this is our entry zone, and you can see you could have taken your entry from the 0.5 level, put your stop below the Asian range, and did you get stopped here? Yes. So see, if you put your stop below the recent low, you might have got stopped out. So I highly suggest you put your stop below the Asian low. Now you can see the beautiful expansion to the upside, and if it would have given you 1 to 2, 1 to 3, even 1 to 7, and if you are lucky, you can even get, yeah, so you get the feel, right? 1 to 36 RR. Imagine you took this trade and you held it. So yeah, let me give you guys one more example and then I will end the video. All right guys, so here is the final example, and this is not the perfect example because I want you to be realistic. You will not always get the explosive moves. That's why I suggest you take your profits at 1 to 2 or 1 to 3. So over here I will mark out the Asian high, which is at 2. So this is the Asian high right here, 2, right? And we have the Asian low right here. Now price broke out of the Asian high, and if I use my fib from the low to the high of the Asian range, price came back to the 0.5 level right there. So if I went long on the 0.5 level, you could have, in this scenario, could have put your stop below this low, but I want you guys to put your stop below the Asian low, and you could have gone for 1 to 2, or yeah, just you could have gone for 1 to 2. Very simple guys. For break-even rules, I would say that you go break-even after 1 to 1.5 is hit, because as you can see over here, price can sometimes come back and retest the range again and again, because this range is a very powerful area, the 0.5 level specifically, right, of the Asian range. So it will keep coming back to this level and bounce off it. So over here you can also see that price went down, it came back and it gave a reaction over here. And yeah, so keep that in mind guys, that 1 to 2 or 1 to 3 is prime. But if you want to be, you know, a little, you know, experimental with this, then you can go with 1 to 4, 1 to 5, depends on you. All you need is this, trust me. All right, just keep practicing this model and you will pass your challenges, get funded, withdraw out your profits, and enjoy your life. I'll see you guys in the next one. Take care. Goodbye.